Launched in October 1995, Reliance Vision was a large-cap focused fund with assets under management worth 2,100 crore rupees. During its 17-year-long tenure, Reliance Vision has gone from being a top performer when it was beating its benchmark handsomely to a mediocre fund who barely manages to beat the returns of the indices. In 2002, Reliance Vision gave its investors returns as high as 75%, as against single-digit returns by the market indices in 2002, and in 2003, the fund's returns were double that of the market indices. But in the bull run of 2007, when the mid-caps gained the most, this fund lost out because of its large-cap focus. In that year, it was only able to mark the performance of the Sensex. The bad news began in 2008 when the fund lost 52% of its net asset value and failed to recover very quickly in the bull run of 2009. Since then, it slipped to the bottom of the list amongst its peers. Let's take a look at some numbers. If you invested 1,000 rupees in this fund when it launched 17 years ago, you would have 25,088 rupees today. But can this fund recreate the magic of its past? Does it make sense for you to stay invested, or should you pull your money out?
Well, the Reliance Vision Fund has fallen from the 20th rank, which it was at a few years ago, to the 62nd rank among its category. What is this fund doing wrong currently? Why has it fallen so drastically in terms of performance?
It has been a mediocre fund for nearly 5 years now. 3 of the 5 years, it has not been able to beat its benchmark, most recent 5 calendar years. So I think, this fund used to be very impressive in good times, in a roaring market, and the kind of lead it took in 2003 to 2008 was quite substantial. And then that is when it got built up. But I think, ever since 2008, it has never been able to make a comeback. So I would say that, it has lost its best days are history, and it has, been a fairly average performer. And has been more volatile than most other, funds in its own category.
Right, Therendra, if we look at the net assets of this fund, it was at 3,600 crore rupees last year. It's fallen to 2,100 crore rupees this year. Now, obviously, a lot of that has to do with the market, but there's also been some redemption pressure. So, would you recommend that investors right now find opportunities to pull their money out as well?
I think, this fund would have also witnessed modest, redemption. I think there are better options, but there are better choices, and one should keep away. And I think 5 years is long enough period for an investor to have given opportunity to this fund to prove itself.
So for investors who pull out of this fund right now, Therendra, are there any alternate options for them that they can put their money into?
Any diversified fund from our growth portfolio or aggressive growth portfolio should do the job. They look more promising than this fund.
Well, finally, your rating of the Reliance Vision Fund, where would you place it?
On a risk-adjusted basis, it's 3-star, but I would put us notched lower because it has been an extremely disappointing experience for investors. I would give it a 2-star.
2 stars, therefore, the Reliance Vision Fund on Investors Guide. We have a quick question that's come in from Vishnesh, who's written in saying he's been investing in mutual funds and they're giving him negative returns. He wants to know what he can do right now to make his investments work for him and give him good returns. He sent us a list of the funds that he's investing in, Therendra. He's the Sundaram Growth, Templeton India Income, Franklin India Flexi Cap and Fidelity Equity. Now, some of these funds are impressive. Would you say possibly that Vishesh is just reacting to a bad market, or is there something in his portfolio for the long term that you would like to change?
No, not at all. I would say that he has chosen great funds. And if he has invested over the past one month or 8 months or 1 year or 8 months or 1.5 years, he has reason to be disappointed. But I would suggest that for an investor who gets disappointed after making investment for this period, a quarter of his money is going into Templeton Income. I would suggest that to keep away from if he has to look at the value of his investment, is unable to take a very objective view. These kind of investors should invest in a balanced fund.
The 4 balanced funds that we have there, would you recommend that he invests in that?
Yes, I think he should also minimize the number of funds that we have there. We have 4 of them. He should just choose 2 of it. One a UTI balanced fund and the other one a HDFC Prudence fund. I think there will be great there will be great complementarity there because the equity component of Prudence is fairly aggressive. UTI balanced fund is all large cap, so I think he will gain greater diversification and he will not be disappointed and he will be able to reasonably participate in the growth.
Vishnesh, that's the advice you're getting. Remember, our stable growth portfolio is on your screen right now. Dhirendra said pick 2 out of the 4 funds. That should serve you well. Alternatively, the funds that you have right now are excellent. You're probably just looking at where the market is, which is where all equity funds are right now, and you are a little disappointed. So you can pick one of the 2 options. It should serve you well in the long term.